Good morning. It is Monday, November 27th, 2023. We're just after 10:30 a.m. in the East Coast, and here I am doing another weekly video on a Monday morning just because that's how it came about. I hope everybody had a enjoyable and peaceful long Thanksgiving weekend. And if you're not American, I still hope you had a great weekend. A lot to get to today, but I think this video is going to be a little bit more concise than maybe my usual ones. And again, if you find any value in this video, if you enjoy my weekly updates, please hit the like button and subscribe to the YouTube channel at Goldfinger Capital. So here we go. Goldilocks, Santa Claus, U.S. stock market. This is a little tongue in cheek on my part, but there's been some research notes out in the last week talking about how the U.S. stock market, the U.S. economy, it's Goldilocks, and we're going to have a Santa Claus rally at year end. There's nothing really to get in the way of that. The soft landing is real, and don't overthink it. Just be long. I can't argue too much because the fact is inflation has moderated significantly. I don't see anything on the horizon that's going to reignite inflation. So for the time being, it is a bit of a Goldilocks environment. It's not too hot, not too cool in terms of the U.S. economy. And the Fed has cover to continue to pause and maybe begin to set the table for rate cuts in 2024. Also, we know that seasonality, final few weeks of the year, usually is very bullish for the stock market. And so, yeah, I mean, as long as interest rates, as long as like the 10-year continues to moderate around 4.5%, 4.4%, I don't see anything that will stop a further grind higher in the US stock market into year end. However, I will say that there are things worth paying attention to. Take a look at this Goldman Sachs hedge fund leverage. So, this is just one broker, but it's a pretty good broker. It's a good sample of hedge fund exposure. Well, gross exposure is the highest it has ever been. Now, the net is still down. So the net exposure is only about 70%, not extreme, but the gross is extreme. And that just means they have a lot of positions on. They have a lot of trades, they have shorts, they have longs, they have leverage. And that leverage can get unwound pretty rapidly. But the conditions for a leverage unwinding are really not there right now. So they'll continue to lever up. But at some point, that trade will unwind. Another thing that sort of adds to the bullish case for stocks here is just cash. There's a lot of cash out there. There's a lot of cash on the sidelines. In fact, long cash is investors' favorite trade, even more than stocks, more than treasuries, more than Bitcoin, more than gold. Cash, there's a lot of cash out there. And that cash could definitely work its way back into the stock market, or at least some of it could, into year end. The tremendous stock rally we've seen since the end of October, well, the VIX is the opposite of that. So the VIX, the volatility, the fear index has dropped from 22 to 12. So it's lost its teenager status. People are not afraid, and complacency is definitely back in vogue. And as I said, there's nothing to sort of stop this melt up in stocks right now, but you have to think as we approach 2024, maybe in the final week or two of the year, it might be a prudent thing to do to actually add some put exposure, because it is so cheap. It is so cheap to hedge here, with the VIX down to 12. The potential for March rate cuts. So, the odds of a March rate cut, according to Fed funds futures, continue to oscillate. Last week, we were at 1 in 3 chance. This morning, it's a 1 in 4 chance. So it's still not a high probability event, but it is definitely possible. We're going to get non-farm payrolls in 2 weeks. So I think it'll come out on the 8th, if I'm not mistaken, Friday the 8th. And expectations have moved down a little bit. I think we're somewhere around 150,000 non-farm payrolls is the consensus. There are some people out there saying there is the potential for a negative number, a negative non-farm payrolls number. Now, if that were to happen, the odds of a March rate cut would definitely surge. And I think it would be at least a 50-50 shot if we actually got a negative print, maybe even better than 50-50. That would be very bullish for precious metals. And we'll talk a little bit more about that. I just want to get a couple more topics out of the way, and then we'll get to gold and silver. So here's our tremendous stock market rally, end of October to last Wednesday. It's interesting because last Wednesday we got this like doji star candlestick, a little bit of a pullback off of that Wednesday morning high, but nothing yet to really be like, okay, that was the top. But this market could definitely use some consolidation, maybe a little bit of a pullback, just to reset everything. I think it got very extended there last Wednesday morning. And if we look at the tech, I mean, the QQQ has been the absolute leader of this rally, absolutely face ripper from 342 on the QQQ end of October to 393 last week. That is a ripping rally, $50 a share in the QQQ in 3-4 weeks. That's not something that you see very often. So tech is very extended here. Overall stocks are kind of extended. So the most bullish thing would probably be to see a consolidation for a few days and more of a sector rotation. So maybe out of tech into cyclicals, something like that. But yeah, we're definitely a bit extended up here, and it's not the time to be chasing and adding more risk. Another catalyst that has definitely helped to spur this rally in stocks is a dollar. The dollar has dropped from 107 at the end of October to 103 here this morning. So it looks like the dollar index chart. This looks like a double top at 107. It's pretty easy to see that double top, but we're back into an area of big support. The 103 level is an area of important support in the US dollar. So sort of goes with the idea that maybe we need to see a consolidation, a little pullback in stocks. Maybe we get to see a little bit of a lift in the dollar off of the support level near 103. One of my key themes as we close 2023 and we go into 2024 is going to be medical psychedelics. Cybin is my top pick in that space right now. I am long Cybin, and the company just did a big financing. They just raised a lot of money at 45 cents a share. They just raised 30 million at 45 cents. There's another tranche of 34 million that could come into the company's treasury at a later date at 51 cents a share, but they are cashed up. I think they have like 40 million in cash right now. So they're well financed to continue multiple trials in their CYB003 and CYB004 compounds. We're going to get an update this Thursday morning. And I think this is actually really important if you're interested in the sector at all. Cybin, if you're a shareholder, definitely this is something you don't want to sleep on. You want to tune into this Thursday morning at 10 a.m. You can sign up for it just on the company's website, the Cybin website. So this is going to be an R&D update, and they're going to delve into the top line phase 2 data from CYB 003. And I think this will be really important. And this could be a market mover. Okay, this could actually be a catalyst for Cybin. We're supposed to get more data from this phase 2 trial over the coming weeks, and some other trials that the company's been doing, phase 1 trials. So this is a catalyst heavy environment for Cybin and for the medical psychedelic sector more broadly. MindMed is another stock in this space. It's one of the larger market cap companies in the medical psychedelic sector. And it was up 16% last week. It's moving up a little bit here again this morning. And they're expected to publish their phase 2 top line data for their MM120 drug for the treatment of anxiety in the next few weeks. So there's a lot of data coming out here in this medical psychedelic space. Valuations have pretty much never been lower for many of these stocks. This sector is as hated as it has ever been, yet these companies are the most advanced that they've ever been. So it's kind of a dichotomy out there in medical psychedelics. And I think that this is a big opportunity in this space. I think that the opportunity is the greatest it's ever been today. So moving to precious metals, just a couple more bullet points. Again, I told you I was going to be concise. So let's get rid of these stock charts, just get things cleaned up a bit here. And okay, so I published this post last week, the end of last week, gold's resilient 2023 performance and the seismic shifts underway in global fund flow. So I'm going to let you read through this yourself, but I just want to point out a couple of things from this post. Obviously, we know about central bank buying continues to be a major catalyst for gold that's helping to lift the gold price in the last year and a half. A lot of this central bank buying really accelerated after the West froze Russian assets in the wake of the Ukraine invasion, February, March 2022. Gold has continued to consolidate in this range between 1940 and 2010 in the last several weeks. And just this morning, we're testing the upper range, the upper part of this multi-week range. Some consolidation here as it moved above 2010 and then pulled back, but we are at the upper end of this range here that I drew in this chart in the post. Seasonality is favorable for gold here in the final weeks of 2023. And I think the most important point, one of the most important points in the bullish thesis for gold is actually the US government budget deficit. So since COVID, the US has been spending money like it's going out of style. So 2020 was the biggest deficit in the history of the country, more than $3 trillion. We know a lot of that had to do with COVID. Well, we followed up in 2021 with the second largest deficit in the history of the country, nearly $3 trillion. And now in 2023, the numbers are pretty much in. It looks like we're at 1.7 trillion, so the third largest deficit in the history of the country. And 2024, an election year, presidential, election year. Right now, the expectations are for $1.8 trillion deficit. I'd bet it comes in above that, closer to 2 trillion. But anyway, the point is, huge deficits, adding an enormous amount of debt to the total national debt in the US, and now having to refinance a portion of that debt at much higher interest rates. All of this is a toxic recipe for the dollar and for US Treasury debt, right? So, one of the key themes heading into 2024 is that the Federal Reserve is going to have to step in and intervene in some way to support the Treasury. And it's this sequence of events, this combination of forces that leads to monetization, Fed monetization of Treasury debt, and a very bullish outcome for precious metals, gold and silver, and maybe even metals like platinum as well. Okay. Um, and just technically, it's a very similar setup to June 2019, when gold had been consolidating between 1200 and 1350 for several years, and 1370 was a level that gold had failed at multiple times in 2016, 2017, and 2018, and finally broke through it in June of 2019 as the Fed pivoted to cutting rates three times in 2019. So, for some of you who may recall, in 2018, Powell was still talking about tightening. Sort of at year end 2018, stock market, bond market really didn't like that. And it caused him to pivot to cutting rates three times in 2019. Gold surged on that Fed pivot, that dovish softening of the Fed stance from 1275 to 1550 in 3 months there, summer of 2019. Well, I feel like we're setting up for a similar sort of a situation where the Fed could very well be pivoting back to rate cuts and an easing in 2024. And gold has tested this $2,080 level multiple times since 2020. Well, maybe it's the fifth or the sixth test of that is the charm and leads to the real, eventual breakout. Recall that breakout in June 2019, gold has never come close to retesting that breakout above the 1370 level. So a lot to chew on here in this post. And then I also had the chance to speak with Jordan Roy Byrne of the Daily Gold on his podcast on Friday afternoon. And I delve into these topics and several others during this conversation. So definitely worth tuning in and listening to that conversation from the Daily Gold. But basically, yeah, gold is set up here. I think it's prime. It's poised for a further move higher over the coming months. I don't think sentiment is anywhere near frothy or euphoric. In fact, I think sentiment is pretty neutral, to be quite honest. And silver, so silver actually, if we update this chart, which I don't have on stock charts, I don't have real time futures quotes on stock charts, but silver is actually trying to break out above this channel right now to start the week. So that would be very significant if we got a confirmed breakout above 2470, 2475 in silver. Then the next level would be about 2550 in silver. So a good start to the week for precious metals so far. This is interesting because this note came out from TD last Friday. I think it was Friday. And they note that it feels like buyers in the West, gold buyers in the West, are exhausted, but Asian buying continues to gather strength. In fact, gold traders in China have just added nearly 17.5 tons of notional gold to their books just in the last week. Okay, 17.5 tons. So let me actually do the math on that. I should have done that prior to the video, but I'm going to do it right now. Okay, so it's over $1 billion in gold that they've added in the last week. That's significant. I mean, that's an annual pace of $50 billion of buying, right? Um, and they're making the point that the buyers in the West seem exhausted up at these levels, and it's actually interesting because we saw Asian buying last night. Gold was strong in Asia, and it's pulling back a little bit here during the U.S. trading session. So it's just interesting. They feel like the CTA trend followers are exhausted and they're not going to be buying gold here at 2000. But the Asian buying continues to be very strong. And they say the causal force, you know, in back of China's purchases is unclear, but it may have something to do with reports that state-owned banks have been active in currency markets, supporting the yuan and selling the dollar. Interesting. Just a very interesting note, but $1 billion of net notional gold purchases in the last week out of China. What are they positioning for? China has been a big buyer of gold in the last 2 years, and it seems that they continue to be. They have a voracious appetite for the yellow metal. So, final topic. Oh, and I got to talk about the miners. Sorry. So, two more topics. The GDX. So, GDX has been forming a potential head and shoulders bottom for the last several months. This pattern is reaching its climax, really here, probably even this week, quite frankly, last week of November. We're heading into year end. I feel like this is getting poised for the final breakout. Maybe a little further consolidation is in order, between $29 and $30 a share. But this is really looking ripe for this breakout above the neckline near $30 in the GDX. And if it triggers, so if we get a confirmed breakout daily close above $30 a share in the GDX, we're going to be targeting up towards 33, 34 area by year end in the GDX gold miners ETF. And I refreshed the chart and we've pulled back a little bit. Totally fine, totally normal. I wouldn't be surprised if we had a little more digestion here for a couple of days before a breakout above 30, possibly later in the week. Some other charts of gold miners. Agnico AEM, this big weekly head and shoulders pattern, rounding bottom formed over the last several months. This chart looks very constructive. But again, this is a weekly chart. This is a long-term chart. This would be more of a chart that you'd be focused on if AEM is a part of your longer-term portfolio. And again, this neckline coming in, I guess around $57, $58 a share in AEM on the NYSE. Well, if we get a confirmed breakout above that, it would target up closer to $75 to $80 a share. But again, this is a weekly chart, so this is a pattern that will play out over several months, not several days. I am Gold IAG. I think this is one of my top gold miner picks heading into 2024. The commencement of commercial production at Cote Lake. This is going to be their flagship mine, their flagship project in their portfolio. And that's a big catalyst with the potential for a significant upward re-rating of IAG, IM Gold shares in 2024. This has potential for 50, 60% upside in the next year. But it's conditional upon a smooth ramp up of commercial production at Cote Lake, and obviously $2,000 gold is a big help to this mid-tier gold producer. Final topic, Hercules Silver chart update. So I don't have anything to add on Hercules fundamentally. We haven't gotten any more news from the company, but I have a feeling, I have a sneaking suspicion that we could get an update this week, maybe with another drill hole, maybe with actually a few drill holes from Hercules at their Idaho project. So the only thing I can talk about is the chart, and I could talk about what's happened in the chart over the last week. So we had a move up last Tuesday, Wednesday. So Canada was open all week last week. There were no holiday days in Canada, so it traded every day last week, but volume definitely tailed off in Hercules. Probably some of that has to do with the fact that it was Thanksgiving in the US. And then it also has to do with the fact that investors, traders are just waiting for the next news update from the company. So it's just natural as the wait extends further, trading volumes start to trickle lower. So Hercules is following a totally typical pattern of a breakout junior minor stock that's a drill play, quite frankly, and we're waiting for more, drill results. It's not too complicated. But last Wednesday, it moved up. It tested up towards the 160 level, but it couldn't hold it and closed back under. It closed at 150. So clearly, right now, we can say 150 is the resistance level in Hercules. It's the next level that it needs to eclipse to propel to new highs. I know that 162 was the actual high, but it's actually 150 is the key resistance level on a daily closing basis. Okay. It has pulled back since. It looks like we're pulling back again this morning on light volume. So just when a stock like this starts to drip a little bit lower on lighter volume, on declining volume, it's just a sign that it needs news. It needs a catalyst to bring in more fresh buyers to drive the price to new highs. If that news does not come, you can expect it to continue to drift down and maybe even to fill in this gap at 93 cents. So that is a big gap in the chart. Recall, that was the gap before Barrick announced that they took a 15% stake in Hercules. They basically bought a further 10% of the company for like 23.4 million Canadian dollars, right? That was the Barrick gap. So we could call that the Barrick gap. The Barrick gap could get filled at 93 cents if the wait for news drags out too long, or if the next set of drill results are not to the market's liking, they're not good enough to the high expectations currently out there, the gap could fill at 93 cents. I'm not predicting that. I'm not giving you a prediction here. I'm talking about potential scenarios for Hercules Silver. BIG.V on the venture, best stock symbol on the venture, big. So yeah, that's it. I think there's support. Big support at $1. That's a big round number. It held as support on this little pullback that we had in early November. So I think $1 is a big downside support level. I think 150 is a big upside resistance level. We're at 125, so we're right in the middle of the range. Everybody's waiting for the next update from the company. I have a feeling we'll get an update this week, but I don't know that for sure. If the wait takes longer, if it drags for another week or 2 weeks, the stock could absolutely drift lower. We've seen it before with very similar, new discovery drill play type stories. because the market starts to get a little paranoid, starts to get worried if the results are taking longer, that the results might not be up to expectations. That's the junior mining sector. I'm just telling you like it is. So that's my update on Hercules Silver. We're still waiting for the next update from the company, more drill results. And at the end of the day, it's the drill results that are going to drive this stock, that are going to bring it to a higher or lower valuation. All right. So that's it for me. I hope you guys have a powerful trading week. And again, if you find value in this video, if you enjoy my content, please hit the like button and subscribe to Goldfinger Capital. Thank you.